challenge I have with Bitcoin, and the whole industry has this challenge, is we've got to deal with these ESG issues. There's a lot of criticism around Bitcoin because of the amount of energy it takes to get a coin awarded. And in that area, I'm working very hard. There's lots of initiatives to create Bitcoin. And I'm not saying we're bifurcating the Bitcoin market, that one coin's different than the other. But if I'm a sovereign institution, and I work with lots of sovereign institutions, because I'm in the indexing business, they would like to fund Bitcoin mining where they keep their own awarded coins, knowing with 100% certainty that they mine them in an ethical and efficient, sustainable manner. And that is where a lot of the new capital is going. And whether that be wind or solar or nuclear or whatever, all of those projects are happening globally, and they're being funded by sovereign wealth, because sovereign wealth has ESG and sustainability committees on top of their asset decision making. So the next generation of coins awarded are probably going to be held in perpetuity on balance sheets of companies that are funded to make them sustainable. And, you know, that's one way to solve that problem.
But you say that every investor could invest up to 20% into a specific sector. So I would ask you, what should happen in the regulatory atmosphere in the US to convince you to bring your allocation up to that 20% into the crypto industry?
What I really want to have happen is I want the regulators to bring policy forward on stablecoins. That's what I want. Because stablecoins are very important to me as a hedge against inflation. And specifically, the one I've chosen to work with is USDC, because I think it's the most advanced in terms of in dialogue with the regulator, not here, but in geographies all around the world. It's a form of payment. It's also a form of hedging against inflation, because if I can at least marry my staking program with inflation, currently at 6%, at least I'm holding value. But I can't really do that until the regulator rules, because even within my own operating company with my own compliance department, they're considering stable coins as an equity, no different than a stock. So I really can't get past 5%. It's not like I can hold a huge 30% cash position. I mean, you know, when we sold off our commercial real estate, we had a huge cash position. We couldn't, it was 30% of the operating company. So, you know, we've been working hard to redeploy that capital. But I really want the regulator to rule on stablecoins. Now, you know that there's been some controversy with certain stablecoins with the regulator. I don't touch any of that stuff. Anything that's involved in a fight with the regulator, I want nothing to do with. I am not a crypto cowboy. I work in a compliant environment. I don't want to get on you know, some kind of a mission saying we have to sue the regulator. That's insanity. That's crazy. And that's really bad idea. And so I think all of us in this industry should understand that we work with the regulator to generate the most advanced policy we can get. And the reason we do that, it's in our self-interest of sustainability, and also it gives us way more in terms of what institutions can allocate into these asset classes. So we should definitely be thinking about that.
That's interesting, because you choose stablecoins as one of the main tools to get value out of your assets, while cash, if you hold cash, you end up losing value. But a lot of people would say, why don't you use Bitcoin then? Why you choose stablecoins instead of Bitcoin?
Well, the challenge I have and many institutions have with Bitcoin is volatility. So when you are managing, or you're a fiduciary for capital, volatility is not your friend, because you're mark-to-marking value of the portfolio every 24-hour cycle. So if you've been given a mandate by an institution, most of these mandates are based on diversity and stability, your number one mandate is preservation. So if you're managing for a pension plan or a university or a state fund or whatever it is, that volatility really hurts you when you're being graded in terms of your mandate. And so I don't think you're going to see there's nothing wrong with putting Bitcoin in a 5% weighting, up to a 5% weighting, and treating it like an equity or an alternative. And I see tremendous interest in doing that, from a 1 to 5%, generally on average a 3% weighting would where you find Bitcoin. But you're not going to get there to a 20, 30% in Bitcoin in an institutional or sovereign mandate. You're just not. Stablecoins have that potential if they were regulated.
You seem to be pretty confident that the regulators will eventually enable crypto to thrive. On the other hand, I had a conversation with Mark Yusko a few months ago, who was expressing this very common narrative in the crypto space, which goes like, there are the incumbents of traditional finance, like banks, and the financial intermediaries that are going to lobby the regulators or still use their influence in order to slow down this crypto revolution that we are looking forward to happen. So don't you see the role of the incumbents as a major issue for crypto to develop further and to get the regulators on their side?
I don't agree with that positioning. I don't think that's going to happen either. The only entity that can control the pace of regulation is the regulator themselves. And it doesn't matter what the incumbents say or do. They will go with the flow of productivity and innovation. Banks, are winning and losing all the time in terms of who makes more money, who has a higher return on assets. I can tell you what motivates a traditional money center bank is return on assets. They spend their whole day trying to figure out how do we optimize for return on assets. And if they're not looking at cryptocurrencies, they'll be left behind. That's what's going to happen, because when the regulator finally rules, if it was just on stablecoin alone, they would have to open a stablecoin desk. Of course they would. Now, are they going to start from scratch, or are they going to be working on it quietly in the background? My guess is they're working on it quietly in the background. They would be foolish not to be.
I wanted to ask you another question regarding the situation with inflation. So, as you said, inflation in the US is hovering around the 6% points, and the Fed now intends to wind down the stimulus measures in order to contain this trend. So how are these macroeconomic dynamics going to impact the crypto industry, the crypto prices in the months to come, according to you?
You're being taxed at effectively 6% if you hold cash. Maybe you don't want to call it a tax, but when inflation's 6%, your buying power 12 months from now is 6% less, and that's a lot. And so we now have added pressures, and I'm no different than anybody else trying to figure out, where do I deploy this? Where can I get stability in this cash? Where can I find a way to hedge? And it brings me all the way back into stablecoin. So I'm a huge advocate for solving this problem with stablecoin. It doesn't mean I don't want to invest in the other blockchains or the other coins or tokens or other ideas. I do. But I can't do 30% positions in mandates of any of them. That's too volatile. So these issues are not going away. The dialogue is not going to change. You're going to see a lot of discussion about this in the first and second quarter of next year. And you're right on the money to be covering this. There's no question this is going to be very important. And I think we're going to start to see some moves with the regulator very shortly. Not just in the US. So we talked about Canada, we talked about Germany, we talked about Switzerland. Those regulators are all talking to each other. They're all talking to each other. If we could just agree on one stable coin between those jurisdictions, that would be huge productivity enhancement. And I anticipate that will happen.
Awesome. Okay. Kevin, that was a great conversation. Thanks a lot for jumping on our show.
You got it.